Bloomberg Audio Studios.
Podcasts, radio, news.
Good morning, I'm Nathan Hager.
And I'm Karen Moscow. Here are the stories we're following today.
One of Wall Street's heavyweights says the U.S. economy is not out of the woods yet. We get the details from Bloomberg's John Tucker. John.
Yeah, Nathan, Jamie Dimon says don't take a U.S. recession off the table just yet. The J.P. Morgan Chase CEO telling a business summit the chance of a soft landing in the next year or two is about 35 to 40%. Well, Dimon says economic indicators have been distorted by COVID-19, and he takes them with a grain of salt. Dimon telling the Financial Review Business Summit in Sydney this morning, while the U.S. economy is kind of booming currently, the risk of recession remains. His comments strike a slightly less optimistic tone than in the past. He's also advising the Federal Reserve wait for more clarity before lowering interest rates. A Fed Chair Jerome Powell last week suggested the central bank is getting close to the confidence it needs to start lowering interest rates, and traders are fully pricing in a June rate cut. John Tucker, Bloomberg Radio.
All right, John, thanks. While investors analyze Jamie Dimon's take on the economy, they'll get another key reading on inflation this morning. We get the February reading on consumer prices and a preview with Bloomberg's Michael McKee.
Two things should define February consumer prices: base effects and seasonal factors. Because inflation was high a year ago, even a fairly strong rise in prices will still send the year-over-year numbers lower. The Fed will see continued progress. January was also influenced by turn-of-the-year price increases that aren't expected to be repeated, which should mean a retreat from that month's strong increase in inflation. The category to watch, as always, is housing. The government's home ownership calculation was unexpectedly hot in January. Economists think that fell back in February. Michael McKee, Bloomberg Radio.
All right, Mike, thanks. On Asia, speculation is growing that the Bank of Japan may be getting closer to raising interest rates. The decision's due to be made at next week's policy meeting, and sources say a final decision will be made after officials see the initial tally from spring wage talks on Friday. April remains the most popular prediction for a rate move from the BOJ among economists surveyed by Bloomberg.
Well, in Europe, Nathan, Rupert Murdoch's News Corp is eyeing a joint bid for the Telegraph newspaper. And we get the details from Bloomberg's Ewan Potts. Ewan.
Good morning, Karen and Nathan. It's the battle for the 175-year-old Telegraph newspaper. Bloomberg has learned that Rupert Murdoch's News Corp, together with the owner of the Daily Mail newspaper, have held talks about a potential joint takeover of the Telegraph. The bid would come together with UAE-backed investment fund Redbird IMI. Now, a joint bid would result in a smaller stake for the Emirati fund, and that's important because British politicians have expressed unease about the sale of a storied newspaper to a Middle Eastern investor. I'm Ewan Potts, Bloomberg Radio.
All right, Ewan, thank you. Now, back in the U.S., President Biden's mapping out a vision for a second term in his budget request for the next fiscal year. The $7.3 trillion proposal calls for monthly tax credits to offset high mortgage rates, child care subsidies for parents, and new powers to lower prescription drug costs. It would be paid for in part with higher corporate taxes and a new 25% minimum tax on billionaires. President Biden pitched the proposal during a stop in Goffstown, New Hampshire.
Now it's time to go further and give Medicare the power to negotiate lower prices for even more drugs over the next decade. Folks, if we're able to do that, we'll not only save lives, we're going to save taxpayers another estimated $200 billion.
Now, President Biden's budget has little to no chance of passing Congress, but he hopes it'll get voters' backing before the November election.
Well, on Capitol Hill, Nathan, a bill that would force a sale of TikTok is gaining steam in the House. The legislation would block app stores and internet service providers from offering the video sharing app unless its Chinese owner ByteDance sells it within 6 months. Democratic Congressman Jamie Raskin says it's a matter of national security.
Our freedom of speech does not depend on authoritarian governments having access to our private data.
But former President Donald Trump is suggesting he no longer supports banning TikTok. In an interview with CNBC, he said Facebook is the real threat, and a lot of kids would go crazy, in his words, without TikTok. The bill comes up for a vote in the House tomorrow.
In health news, Medicare may soon be required to cover the blockbuster weight loss drug Wegovy for heart disease patients with obesity. That story from Bloomberg's Jeff Bellinger.
Medicare, the federal health insurance program for the elderly and some people on long-term disability, does not currently cover weight loss drugs. But after the FDA said Wegovy could be used to help prevent life-threatening cardiovascular events, it now raises the question of whether Medicare prescription drug programs will have to cover it for patients with a history of heart disease. A spokesperson tells us the Centers for Medicare and Medicaid Services is reviewing the FDA's action to expand the use of Wegovy to reduce the risk of cardiovascular death, heart attack, and stroke in adults with cardiovascular disease and either obesity or overweight. The popular weight loss drug, which has helped millions of Americans shed pounds, was given an expanded label by U.S. regulators last week. Jeff Bellinger, Bloomberg Radio.
All right, Jeff, thanks. Well, staying in the medical field, one of the biggest movers today is Acadia Pharmaceuticals. That stock down 18% in early trading. One of the company's drugs failed to meet goals of a late-stage trial in a trial for schizophrenia.
Well, on the flip side, Karen, shares of Oracle are surging 13.5% after reporting strong sales with growth in its closely watched cloud computing business. More on that from Bloomberg's Charlie Pellet.
Cloud revenue jumped 25% to $5.1 billion in the period that ended in February. That surpassed Wall Street's $5.06 billion estimate. Of that, $1.8 billion came from renting out computing power and storage over the internet, and $3.3 billion from applications. The Austin-based company, known for its database software, is focused on expanding its cloud infrastructure business to more forcefully compete with Amazon, Microsoft, and Alphabet's Google. In New York, Charlie Pellet, Bloomberg Radio.
All right, Charlie, thanks. Well, pay raises for a pair of top of Bank of America execs, even after the CEO's pay was cut. The bank disclosed pay increases of more than 10% for two of its highest-ranking executives, Chief Financial Officer Alistair Borthwick and Jim DeMare, head of the bank's Global Markets Division. The pay boosts come a month after reporting CEO Brian Moynihan's compensation was cut in 2023. Borthwick's total compensation climbed to $12 million year, while Jim DeMare saw his pay rise to $21 million. Time now for a look at some of the other stories making news in New York and around the world. For that, we're joined by Bloomberg's Michael Barr. Michael, good morning.
Good morning, Karen. The Israeli military says about 100 projectiles were launched from Lebanon into Israel today. It comes after Palestinians in Gaza began fasting for the holy month of Ramadan. There were no immediate reports of injuries or damage following the strikes, which appeared to be in response to Israeli airstrikes deep inside Lebanon on Monday. UN Secretary General Antonio Guterres called for an immediate ceasefire in Gaza. Guterres says the eyes of the world and history are watching.
We have witnessed months after months of civilian killing and destruction at a level that is unprecedented in all my years as Secretary General. Meanwhile, life-saving relief for Palestinians in Gaza is coming in trickles, if it comes at all.
The UN's Antonio Guterres says hunger and the humanitarian crisis are worsening across Gaza. The Republican National Committee just fired more than 60 staffers yesterday, just days after Donald Trump, the party's presumptive nominee, handpicked the organization's leadership. According to people familiar with the matter, Chris LaCivita, a senior Trump aide, is splitting time between advising the presidential campaign and as the committee's chief operating officer. On Friday, the RNC voted to install North Carolina Republican Committee Chair Michael Whatley and the ex-president's daughter-in-law, Laura Trump, as co-chairs. Joe Biden and Donald Trump hope to clinch their party's presidential nominations with dominant victories in state primaries today. Primary contests will be held in Georgia, Washington State, Mississippi, and Hawaii. In what may be a major step towards the end of the violence in Haiti, the nation's acting prime minister will resign. The Caribbean Community Organization announced late last night that Ariel Henry will step down once an interim leader has been named. Guyanese President Irfan Ali made the announcement at a conference in Jamaica.
We acknowledge the resignation of Prime Minister Ariel Henry upon the establishment of a transitional presidential council and the naming of an interim prime minister.
This comes amid a surge of gang violence that has pushed the country to the brink of anarchy. Remember the Brooklyn preacher who was robbed of $1 million of jewelry during a church service? Now Lamore Miller Whitehead, known for his flashy lifestyle, was found guilty in federal court in Manhattan of wire fraud, attempted extortion, and lying to the FBI. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg, Karen.
All right, Michael, thank you. Well, we do bring you news throughout the day here on Bloomberg Radio, but now you can get the latest news on demand whenever you want it. Just subscribe to Bloomberg News Now to get the latest headlines right at the click of a button. Get informed on your schedule. You can listen and subscribe to Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, plus Apple, Spotify, and anywhere else you get your podcasts. Time now for the Bloomberg Sports Update, brought to you by Tri-State Audi. For that, we bring in John Stashower. John.
Okay, Karen, a flurry of NFL offseason activity with the Giants adding 4 players, all after the news that Saquon Barkley was leaving. Not a surprise since he was a free agent, but it is a bit of a sting to Giants fans that he's going to their division rival, Philadelphia Eagles. Got more money from Philly than the Giants were willing to give him, just under $16 million a year, second most ever for a running back. The Giants will replace Barkley with Devin Singletary. Brian Daboll knows him from his time in Buffalo. Last season in Houston, Singletary had over 1,000 yards from scrimmage. Help coming to the Giants' much maligned offensive line. They signed guard John Runyon from Green Bay, tackle Jermaine Eluemunor from the Raiders. And the Giants have added a big-time pass rusher. Brian Burns was a Pro Bowler with Carolina. Giants sent 2 draft picks to the Panthers to get Burns. They quickly locked him up with a $150 million contract. As for the Jets, they signed guard John Simpson from the Ravens, defensive lineman Javon Kinlaw from the 49ers, and unlike last year, the Jets now have a dependable backup quarterback, signing veteran Tyrod Taylor, who was most recently a Giant. The Falcons have their QB, signing Kirk Cousins, 4 years, $180 million. If he makes all that, Cousins will have earned over $400 million in his career. Today is Darryl Strawberry's 62nd birthday. He's in a hospital in St. Louis. The ex-Met and Yankee slugger revealed that he just suffered a heart attack, but said in his post that all is well. The Yankees holding their breath. Should learn today the results of the MRI on Garrett Cole's elbow. The ace pitcher feeling discomfort. At the Garden, Rangers beat the Devils 3-1. The Islanders' 6-game win streak ended. Shutout in L.A. 3-0. Bruins and Capitals both lost. Celtics and Warriors both won. John Stashower, Bloomberg Sports. Karen and Nathan.
Okay, John, thanks. Let's get more now on the latest economic forecast from J.P. Morgan Chase CEO Jamie Dimon, the Wall Street giant who once warned an economic hurricane was coming for the U.S., now says he would not take the risk of a recession off the table just yet, though he says that doesn't mean the Fed should jump the gun when it comes to cutting interest rates. For more on this, we're joined by Bloomberg's Kriti Gupta. So, Kriti, maybe a little bit of tempering here of the economic warning signs, but Jamie Dimon is still sounding a bit of an alarm.
A little bit of an alarm, but not something that's that counter to consensus. Look, he does say in this interview that 70 to 80% of, markets are pricing in a 70 to 80% chance of a soft landing, which basically means that everything is going to go fine. He even says that the worst case scenario, it looks like, would just be stagflation, which even that is better than a recession. That being said, he's really pointing to the idea the Fed cannot jump the gun when it comes to cutting interest rates. And he says, look, you're still dealing with very strong employment numbers, very strong wages that are continuing to go up. He actually says the credibility is the bigger worry here, that the Fed's credibility, they have a lot going for them right now. They've been right in a lot of ways, but they've also can't really accelerate because of those market pressures. And that's kind of what he's pointing to. He's still, saying, look, the consumer is still very strong, which is why he said stagnation is a more likely scenario than recession. But he is still pointing out that it's not completely off the table, which again, Nathan, not out of the ordinary.
Yeah, well, but more recently, Kriti, the J.P. Morgan CEO had been sounding a little bit more positive about the market outlook. What's behind this view that things might be changing just a little bit when it comes to the outlook for markets?
Well, I think it's a similar outlook that a lot of the economists and strategists we speak to have been saying, which is that this is looking a little too good to be true in that, yes, there is consumer resilience. And Jamie Dimon and even Brian Moynihan over at Bank of America have both been some pretty strong advocates for the U.S. consumer and have been right in that it's the U.S. consumer that's strong, whereas if you look at Europe or Asia, that's where you're actually seeing a lot of the weakness. The concern is that there is such a thing as too strong, as my mom would say, and I would never admit this to her. It's a good thing she's still asleep. Too much of a good thing is a bad thing, and everything in moderation. I think that's kind of the point that Jamie Dimon is getting to, whereas that if you're talking about that kind of strong consumer that continues to be strong, well, that is inflationary and at its worst stagflationary, which means that ultimately things could get stuck at a point where you're only growing so much. And in the long term, that is actually a negative thing, as history has shown.
Yeah, and one thing that stood out to me from Jamie Dimon's comments to this summit is that we should take post-COVID economic data with a grain of salt. I guess that speaks to this idea of Fed caution, Fed credibility as well.
It does. Look, Fed caution, Fed credibility are two different things here, because the reason that the Federal Reserve might actually be thinking of kind of front running these cuts, which, by the way, all indications point to June in terms of kind of the pushback that Chair Powell has received and could even push it back further. But a lot of the concerns here is that the markets are ultimately driving the inflationary story. And Nathan, I'm going to nerd out for a second. Bear with me. Hold your breath if you can. But basically, you're seeing so much money on the front end of the curve that the direct impact into the economy from the markets is just bigger than it usually is because of the way the markets are functioning on the front end. They're not diving into 10 years or 30 years for the bond market. And that's the concern for the Federal Reserve, because we talk a lot about, well, they could cut rates and then the economy will feel that rate cut 12 to 18 months down the road. That's why the lag is so important. But what happens if you're starting to see the markets a little bit more in control? There was a Fed survey out yesterday that suggested that people are expecting inflation expectations higher, that perhaps even in today's CPI report, you could see an uptick in inflation for the second time in a row. What does the market do when you see that kind of data? And does that have a more direct impact on the economy than what the Federal Reserve decides to do in a couple months' time?
This is Bloomberg Daybreak Today, your morning brief on the stories making news from Wall Street to Washington and beyond.
Look for us on your podcast feed at 6 a.m. Eastern each morning on Apple, Spotify, and anywhere else you get your podcasts.
You can also listen live each morning starting at 5 a.m. Wall Street time on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130.
Plus, listen coast to coast on the Bloomberg Business app, SiriusXM, the iHeartRadio app, and on Bloomberg.com. I'm Nathan Hager.
And I'm Karen Moscow. Join us again tomorrow morning for all the news you need to start your day right here on Bloomberg Daybreak.